Well, I would start from the fact that the market has already gone further than the rating agencies. Actually, it's quite striking to see that France is better treated than Spain, for instance, by the rating agencies. But France is currently paying more than Spain for its debt. So obviously, we still pay attention to what the agencies say, but the market has already moved on. I would say. And what I think is interesting is that there hasn't been much movement the last few days on the spread. Probably because a lot of these developments were priced since last week. I think what we need to think about is in terms of delay to the consolidation. But what probably reassures markets to some extent right now is that there is not going to be anything like a government shutdown in France. The parties which voted against the government said that they would vote for the special law that will normally allow us to roll over the budget for next year. So there is no immediate threat, I would say. If you look at the CDS spread, there is no really questions about France's debt sustainability. There is an issue, obviously, around the quantity of bonds that France will emit in the years ahead because the deficit remains too high. But France currently pays 3% on a 10-year. It's not something that is really damaging to the economy. So obviously all this is negative. It delays the necessary consolidation, but it's not as dramatic as what first glance analysis would probably conclude to.
So specifically, to look at the deficit, of course, the Barnier government was trying to make this 16 billion euro adjustment in tax hikes and some spending cuts there. How can anyone, given the picture in the National Assembly, can anyone actually make some of the reforms and take some of the measures to try and tackle this issue? Or is the political situation and the deadlock in Parliament means that no one is actually going to be able to address the deficit issue?
My best guess is that in the current situation, what is going to be happening now in the next few months is sort of minimal arrangement based on this idea that you simply roll over the budget from last year. So for the next few months, probably no one is really expecting big moves in terms of big policy decisions. Now, in terms of what needs to be done, there probably needs to be some sort of political clarification on this. But if you want to be on the positive side, maybe the country needs to go through this complicated episode for minds to be a bit more focused on the need to provide a consolidation. But it's true that within the next few months, given the current configuration of the National Assembly, it's going to be very hard to find a majority for, let's say, a big fiscal package. But again, I think the market has understood this. I think that the current pricing in the market already embodies this assumption. So again, now my guess is that everyone will focus on the next episodes, the next decisions. And a lot of people have been operating under the premise that there will be early elections when it becomes constitutionally possible again, which is the middle of 2025.